Hi, friends. So, welcome once again. At this point, we'll be looking at the theories and some other extensions of ethics. Okay, so we'll consider ethics once again on a different dimension, after which we'll look at how ethics relates with corporate social responsibility. And of course, we cannot treat ethics without looking at corporate governance. So, after this session, we'll look at corporate governance as well. So, we'll make sure we keep it within a short time so that at least you could always get a chance to review it quickly and then um, have a deeper understanding of it. Okay. Once again, I would say this is a summary. This is a summary of what are we doing. So make sure you have the text and then it gives you a deeper understanding of some of these things. Also, all the materials, reading resources, the materials that we've posted online, you should use them. Okay, kindly use them. All right. Okay, so we're looking at the ethical environments, and typically these are being directed by some theories that move them. Okay, typically you find two theories always being cited: the deontological and then the teleological. Okay, but ethical environment is always driven by two: the consequentialist approach. Okay, and then we have the pluralist approach. We also have the absolutist and the relativist. It works. They all have to. They're all talking of different dimensions of ethics. By the end of the day, they're all looking at how does the organization operate with the highest level of ethical understanding, ethical applications, ethical manifestations, both on the part of the individual and on the part of the company to ensure that society survives or lives even when the company is not there. Remember, it is a society that gives the company the legitimacy to survive. All right, no matter what we do, it is a society that when we operate in line with the norms and the values, okay, of the society, they give us it's a resource. They give us the legitimacy to survive. So all ethical approaches, theories are looking at how do we, at the end of the day, obtain this legitimacy. Okay. Now, the consequentialist approach, as the name sounds, typically we're looking at the situation where we're making decisions based on the consequences, the final outcome, okay, rather than the action itself. So if the action will produce a terrible results, it's not about how much we invest in the action, but the terrible result at the end of the day. Okay, so we are looking at the end, the outcome rather than the action itself which we take. Okay. So if the action is terrible, but yet the outcome is positive, that's what consequentialists suggest that go on, do it. If you have to kill two people to save 100,000 people, do it. It's the action. They don't care. So you see, sometimes you watch it in movies where military guys will say, listen, the hostages which have been taken are just like two. Blast the whole area so that we can save the terrorists from killing thousands or millions of people. So it happens. It happens in real life, actually. You see it in movies, but it happens in real life. There are two perspectives to the consequentialist approach. So we have egoism, individual ego, from the word ego. So looking at how favorable would this be to me? How will it affect me? So I'm thinking of myself only, not the overall picture, not the bigger picture. Then we have the utilitarianism, which talks of the greater good than the individual. Okay, so we're talking of the sum is better than the individual parts. Okay, now utilitarianism actually can be extended more. Okay, so you normally will find utilitarianism um, as a theory standing on its own. Okay, let me put it that way. So it normally will talk of consequences and it links with teleological theory. So at the end of the day, what utilitarianism is talking about is that the consequences, the end results, the end justifies the means. Okay, so how good or bad a decision is, how acceptable or unacceptable a decision is, hinges on the results or the consequences to the larger populace. That's utility. So from the word utility, economics, utility, the bigger picture. Okay, so whether the decision is good or bad, whether it is acceptable to the community or to the organization or not, it is all about what is the greater benefit to the bigger picture, to the whole. Okay, so ethically good decisions will lead to positive outcomes. That's what they say. While ethically bad decisions will lead to either less positive outcomes or negative consequences. Okay, so the principle normally talks of would the bigger picture meet would we meet the needs of the bigger picture or just one person than egoism? Okay, that's utilitarianism. Okay, that's utilitarianism. And then let's look at the next one. Okay, so the next one talks of the pluralist approach. Still, utility comes in. Okay, so looking at the needs of the bigger picture, everyone. Okay, then we also have under the pluralist approach the relativist. Okay, so here we're talking of different people, different cultures. They all have a different view to what is right or what is wrong. Okay, so that's why morality doesn't come in here. Some groups would think that taking a little alcohol doesn't spoil anything, it helps. A little group would think that having more than one partner doesn't worry, it is a culture. Okay, so the cultural viewpoint dominates than what we generally would think is universally acceptable. So there's no universal moral code or ethical um, point of view. The ethical decision depends on the circumstances and what the cultural setting allows them to pick. So that's why we say it is relative. I don't like this, that's you, it's relative to you, but somebody will like it. So it depends, okay? Then we have the absolutism, and this one relates to deontology. I'll speak a little about deontology. So, absolutism talks of certain outcomes, certain actions are inherently right or wrong, regardless of the context. Okay, so this is where deontology comes in. So, deontology simply looking at the absolute moral values that applies in all circumstances, and it hinges on Kant. If you've heard of Kant's um, philosophy, okay, it is simply talking of the motivation behind or the duty or obligation of the decision maker. Okay, so I'm a security person. Mine is to protect my household or the organization I'm working. So if I see somebody coming in to destroy something, my moral duty or what I've been assigned to me is to get rid of this threat. Okay, it doesn't matter if I have to break his leg. The motivation is key. At the end of the day, you look at saving somebody's life. Okay, so a net balance of good over evil is what we're looking for. A net balance of good over evil for the decision maker or the society is what deontological ethics talks about. So, like I said, based on Kant's philosophy says that good will manifest itself when it acts for the sake of duty, not from experience, no. And it talks of duty here implies of my recognition, how I adhere to laws and precepts, what I do right. Okay. So these are the two main things we'll stick to in terms of the ethical environment. There's also one item which is the justice and fairness. It's very important. Look at that one. You're not finding it on the slides here, but justice and fairness, in society, justice and fairness theory of ethics, in the society, we all have scarce resources. We are all not self-sufficient. We're looking for more. We are competing for these scarce resources. Now, who will allocate these to us? We need a justice system. Otherwise, somebody will pick more and leave the smaller one for the rest. Okay, detrimental to other humans. He doesn't care. He picks the bigger one and leaves and runs away. Ego. So humans need a system that will fairly allocate these scarce resources and also appropriately share the burdens of the society so that the rich can beg more, the poor can get less, so that we can all bear this. Okay, so it is a mechanism. Justice and fairness theory talks of a mechanism. Allocate this legitimately based on who needs what, based on national reasons, based on the principle of fairness. Okay, on merit, on need, on equality, not just leave the system to decide on its own. Else, the rich will always cheat the poor. Okay, that's justice and fairness. So you normally will find these three consequentialist approach. Okay, and then you have the pluralist approach. Okay, which talks of this. Like I said, relativist normally tends to have a little of teleology, a little of utilitarianism there. But at the end of the day, we're talking of benefiting the masses. Okay, let's move on. Now, greed. You all understand greed. It's a common language, right? Greed. You want more for yourself. You don't think of others. It's all about you. It's not about someone. Okay, it's all about you. Thinking of yourself. Just trying to satisfy yourself and leaving the rest. Greed is unethical and it is also immoral. So for that one, that particular terminology, it cuts across both legs. I think all religions will agree that greed is not right. I'll be surprised to see a religion or even someone who doesn't follow religion to think that greed is acceptable. No. There are some people who are moralists. They don't belong to any church, any religion, but they are moralists, upright, and they know greed is not something which is right because it has adverse negative impact on the system. If you are greedy, then others have to go with less. I want all. I want all. I don't want everyone to have what I'm having. Okay, so it's very rather unfortunate. Almost every human being at a point in time tends to be greedy. Okay, so society, organizations, they are simply collections of these individuals, and if you're not careful, individuals greed affects applies to usually human beings. Sometimes you see animals displaying some elements of greed, but any organization that has human beings, you should know that for sure some will be greedy. Okay. So what do we do? Greed is a short-term attribute. It's short-term. It's not always beneficial to the organization. What we have to do is apply the justice and fairness system theory so that we can easily allocate and allow equity to prevail. Okay. There is, if you take the slides, I think there's some additional notes under the footnote which talks of the Wall Street 1987 situation where it defines greed. Okay, and it looks at greed. It said greed, for lack of a better word, is good. They said greed is right. Greed works. Greed clarifies, cuts through, captures the essence of evolutionary spirit. And greed in all of its form, greed for life, for money, sometimes it's interesting for you to read these quotations. Okay, so just take a note at this. And there was a problem which was cited in the Wall Street publication of that time. All right, so again, greed, like I said, very pervasive. It can destroy the system. We all want something at one point in time. We all want to be greedy. It's a short term. We have to solve it. Otherwise, it can affect everyone. Assuming one person decides to display some greedy act and you don't control it, what will happen is that it will permeate. It's very pervasive and quite infectious than the COVID virus. So if you don't control it, it runs across. So we have to cut it short. Okay. In the workplace, there are a number of ethics as we see it. It runs across a number of dimensions. So it's an interrelated matrix. It's like a web. Personal ethics that applies to the individual, applying the principles. Okay, professional ethics, which is also guided by the professional standard or IFAC, okay, and then organizational culture, the culture we have. Do we all agree that greed is not right? Do we all agree that risk must be reduced? Okay, so the culture that we have at organization and then the system that organization has in place to ensure that they run efficiently, ethically to meet the needs of stakeholders and um, all other of shareholders and all other stakeholders. That's what I wanted to say. Okay. All right. So now let's look at two approaches to ethics. We have two: compliance, okay, where we're looking at satisfying the letter of the law. That is more of formalism. So it's like um, don't work on a certain day or don't work after 5 p.m. We're working 9 to 5 strictly. So when it's 5, the person closes and leaves. Okay. That's it. Once it's 5, it's gone. Even if there's an urgent need to save a life, he doesn't care. We're working 9 to 5. That's when I was hired. So he works and leaves. But we have the integrity based, which is quite important. And I think everyone should go by the integrity based than the compliance based. Integrity based is saying that we work according to the spirit of the law. So if there is an urgent need to be met after 5 p.m. to save a life, to meet a deadline, we stay behind and work. So compliance is purely rigid, follow laws, rules, and regulations. We do 1 plus 1 is equal to 2. But if there's a zero, 1 plus 1 plus 0, where did the zero come from? Knock it off. Okay. But spirit of the law, integrity is saying that no, let's consider the zero. Where did it come from? How will it affect the equation? And if we have to adjust, let's adjust. Okay. So that's the spirit of the law. So remember these two approaches to ethics, compliance and integrity. Okay. One is formalism, one deals with going the extra mile. So there is always a byproduct of ethics, and that is the whistleblowing. So you're in a workplace, you see something is not going well, report it. So most organizations today have set up dedicated lines anonymously. You call it anonymous. They keep your information anonymous and they ensure that you are protected, safeguarded, so that if you see anything untoward going on in the workplace, you report it. Okay. So if you see anything which is not working, report it. CIPD 2021 described whistleblowing as the situation when a worker will provide certain types of information which has come to their attention, usually to the employer. They provide this to the employer or to a regulator or sometimes to a third party. In this case, they raise a concern about the danger or illegality that affects others. Now, the question is there are some dangers with holding whistleblowers anonymous. There's a situation where this lady, it's a real case story when you read the ACFE text on fraud examination. It tells you of this lady who anonymously reported the situation to the organization. Auditors were called in, fraud examiners were called in. They examined the books and everything. Because this lady has reported her female friend, that the friend is doing something suspicious. So they wasted time, money, energy, resources. Okay, company sometimes they have to stop operation for like 6 months for the investigation to be conducted. When they finished the investigation, there was nothing found. The one who had been accused was clean. And you know the interesting thing that came up. She reported a friend using the whistleblowing anonymous system, not knowing because the reason for which she reported was because her friend was sleeping with her boyfriend. Okay, so it's crazy, it's crazy. It happens. So sometimes the anonymous system it gives a very good way of safeguarding the one who lodged a complaint. But again, it sometimes puts some innocent person in an awkward situation. It wastes the organization's time. So where necessary, we have to reprimand those who use the system terribly just to advance their own cause. Greediness comes in here. It's all for himself or for herself than the rest. Okay, so the female friend was sleeping with her boyfriend and decided that if I cannot get my boyfriend back, I'll report you to the organization so that you'll be under distress and stay away from my boyfriend. And this was the outcome of the investigation. All right. So let's move on. All right. So in order to create a culture that will help organizations to promote their professional ethical codes, we use the HOTTA system. Okay. HOTTER, HOTTA system. So one, honesty. Let's promote everyone. Let's ensure everyone is honest. Let's promote the culture of honesty in the organization. Everybody should be honest. Be an open book, okay? Now, the next one, openness and transparency are a bit related. Openness, one is the giving, one is the receiving end. So organizations should freely provide needed information. Open. You request and I give, okay? In that way, you become transparent. Those who are outside can easily read you. So you are transparent when people see you to be open. You are open when you are giving. Okay, so know those two things. Okay, transparency, make it easy for people to review your work. Okay, open, give it to them whenever they ask. And then trust, promote the culture of trust amongst the organization. We are all working for the interest of one stakeholder or the other. Empower employees to give their best. So you empower them. He knows that he's the goal owner of this activity, so he does his best, takes his own decisions, but make sure it is accountable within the framework of reporting. And then respect for everyone, for employees, for stakeholders, from the top to the bottom, from bottom to the top. It doesn't happen that there is a hostile working environment. Okay, so the HOTA principle helps to create a culture where we can always promote our professional ethical codes. Okay. Now, accounting ethics, we've seen it from IFAC, okay? IFAC's 5 principles. It requires us as professional accountants, SEMA members, registered students, wherever you are, once you are part of the body, and as well as other professional bodies you can think of throughout the world, they require you to hold the highest standard of conduct of integrity, okay, and also uphold a good standing and reputation in the profession. So refrain from doing something that will bring the name of the organization in disrepute. So always make sure you do something that will promote the general good of the profession. It goes to yourself, it helps you as an individual, but at the end of the day, IFAC would always want members to stand right. Okay. Now there's threat to compliance with this code, with ethical codes. There are threats. And we can always, again, there are five. We can always find safeguards to these threats. Self-interest. So, for example, if I'm an auditor and I'm the same person who prepares the financial statement of the company, or I have shares in the company, I have some interest there. My close members are working there. That's an interest, okay? So let me just pick it from where you have an interest. If I'm the one preparing, I will use that one for the review. So a self-interest is where you have some financial interest, whether from yourself, from your family members, anyone you know who holds a stake in the company. That's self-interest threat, okay? Then we have the self-review where I prepare the accounts and I go back to audit it. And I found that situation in audit, most audit firms. You have the advisory section. They will prepare the the financial records for the company, and then the audit section goes to audit them. It's the same thing. I mean, it's different guys who are doing it. Sometimes they put in some controls, but at the end of the day, it's like a brother auditing the brother. They are the same under the same umbrella. Okay, so that's self-review. Advocacy. So the accountant then holds himself in a position where he can defend the account. So for example, an accountant who is a legal practitioner who has prepared accounts for the company or audited the company, and then also decides that he can stand in the dock to defend the client. Advocacy, advocating. Sometimes they even use the opportunity to promote activities or the products and services of the company that they audit or that they work with. Okay. So in this case, you tend to threaten the objectivity. You are not straightforward. There's some conflict of interest. There's some bias there. Okay. Familiarity. Are you too close with a company? Have you been auditing them for 5 years, for 10 years, for 20 years, and still you're the same with the company? No. Then you are most likely going to be standing the risk of being too familiar with them. Said that even when they make an error, you cannot openly tell them to desist from that. So today, you see most organizations or most regulators asking companies that no, you have to rotate the auditors after a certain point or after a certain number of time. Okay. And then we look at intimidation, perceived or actual threats that deter acting objectively. If the clients, the fee I get from the client accounts for about 50% of my annual turnover, annual fees, then when they withdraw, they can tell you that, well, if you don't do this, we are going to stop, we'll change you, we'll take a new person. And what will happen? You decide to give in. Okay. So those are the threats. Self-interest, if you think you can gain personally from taking that job, it is not right. Okay. Or if any of your members could take that, could be getting something. You have a wife who has a share in the company you are auditing. It's not right. Self-review, you are the same person who does the client's work. Okay, you prepare the accounting standards and you also go into audit as an example. Advocacy, you're trying to help them stand fair. Okay, and then familiarity, change them. And then intimidation, where your the income you get, or if these guys are the ones who give you so much work to the extent that if they move away, you end up to struggle to survive. It is not right. Okay. So the safeguards we can always implement against these threats to the ethical standpoint or to our ethical positioning is to educate, train, give them some experience. Okay. The professionals, the guys. Okay. CPDs are also important. Make sure you always keep abreast with the changing trends. Corporate governance regulations. We'll look at that in the next section. So corporate governance regulations helps a lot. The NEDs, the non-executive directors, the CEO, the board chairman, the audit committees, they can step in to ensure that there's some fairness, there's some compliance with the laws, with the regulations. Okay. Also, obtaining or trying to attain to the higher standards of the profession is very important. And like I said, professional monitoring, regulators will monitor what is happening. People who deviate, who go against the code, needs to be disciplined and to be sanctioned. And you might have heard over and over where even the big four audit firms are fined because they didn't follow the ethical codes of conduct. Okay, so it happens recently back home, recently in Ghana. It happened that some banks collapsed, and it happened that there were auditors or chartered accountants who overlooked the weaknesses in the system because they were just interested in doing what they were doing. Maybe or because sometimes they don't put qualified guys on the job. And they were fined by the regulator. Okay. External review is always important. We should have peer reviews who will come and audit the auditor, who will come and review the work of the auditor. Okay. If there are internal complaints, let's use them. Let's report to the professional bodies. Let's report to the regulators. Let's use the whistleblower policy. Okay. And again, duty to report breaches of ethical requirements. Use the whistleblower, report to the legal authorities. Okay. The only headache is that people sometimes don't use the ethical code of, don't use the byproduct of ethics, the whistleblower policy. Why? Why won't they use it? Because sometimes their anonymity will be disclosed. Sometimes they don't use it because they report and nothing is done. So if I keep reporting, and nothing is done, what would I do? Okay. So it's sometimes discouraging for you to be using these methods, okay, amongst others. All right. So the public or professional interest, the question is, with these five core principles, ethical principles, the question is, which one operates in the interest of the profession or in the interest of the public? Okay. Integrity and objectivity, they quite seem quite reasonable. At the end of the day, they more or less looks like benefiting both ends, to the profession, to the public. If I'm doing the right thing, even though nobody is watching, it is to me, my integrity is high, but it can also affect the profession as well. Okay. So it cuts across both ends. It cuts across both ends. What about professional competence and due care? If I keep updating myself in the changing trends, professional interest, yes. And again, it also helps the public interest because you'll be doing the right things which will safeguard the system. So it is always important to update yourself. You help the society, you help yourself. When any technical challenges come up, you are able to easily resolve it. Confidentiality, this is quite a bit complex, okay? Because at the end of the day, can we trust the accountant to keep the information? Again, if I think I can use this information to gain more clients, would I use it? Why wouldn't I use it? If this client, I know this client will get rid of me in the few months' time, I could use this information. Okay, so it's quite tricky, a little bit problematic. Okay, would you get more clients if they knew you wouldn't keep a secret? So you're doing it because of ego. I need it for myself. Okay, is it in the profession's interest? But how can I justify to the public? Okay, so it's in the it's a professional interest. Don't disclose this information. If you disclose it, the company will shut down. But if you disclose it, the public will gain. So confidentiality can hover between two. It can be to the public interest, it can be to the individual interest, depending on where you stand. Okay, it can be quite difficult. Okay, it can be complex. Okay, there's a disclosure. Do you have to disclose if in compliance with technical standards or peer review? Do away with the public facade. Okay, sometimes you want to keep this information because a peer reviewer would disclose that you were not doing it, so you kind of want to hide it. Okay, you kind of want to. So I wanted to cite this example, but it's quite confidential, so I will not hide. I will not bring it out, else I will even be breaking the confidentiality rule over there. So it depends on where you stand. If the public will benefit, but the company will lose, what will happen? If I go out and report my organization, I'll report this thing, and it happens that my organization even ends up losing the clients, and it affects the overall revenue base of my organization. That's quite unfortunate. Okay, let's wrap up. So we'll look at CSR. So at the end of the day, ethics links with CSR. Organizations would always want to work, okay, to ensure that they meet the general good of the society. So business ethics is just one dimension of the corporate social responsibility that we have to do. live well to the benefit of the society, and at the end of the day, you are actually promoting the social system. Okay, so being socially responsible means you do things which will not affect the society. Give them goods and services that will promote their health. Treat employees fairly. Animals, treat them well. Health and safety rules and regulations. Good customer care, customer satisfaction is very important. At the end of the day, you are promoting, you are doing something to help the society. And currently, all organizations want to promote some form of CSR. At the end of the day, why? Because they know that when they undertake this sustainability or sustainable development activities, CSR activities, their brand spreads wide and fast. Today, you can see Amazon donating a lot to society with foundations because at the end of the day they gain something from there. Okay, so brand strengthening is their reputation grows. You end up operating at a lower cost because you get the legitimacy from the society. You attract high caliber of staff. I always want to work with organization that respects the society, that helps the society. There are always the opportunity for you to increase your market share. Okay, and you differentiate yourself from competitors. You always gain a competitive edge over your competitors, over your rivals, and at the end of the day, your profitability increases. Today, many articles and many research has been done to show that companies who engage in CSRs actually end up reporting higher profits than their peers. Okay, so this is where I will end the second part. I've gone past my 30 minutes, unfortunately, but that's it. Okay, so that's it. We'll meet in the next session. See you soon. Bye.